Today I wanted to talk about the multifamily market for the Eugene Springfield area and what we're seeing for trends and kind of what's the hot properties in the market. So right now, probably the most popular properties are located near the University of Oregon, both from national student housing developers as well as local investors. We're seeing the university market be kind of a hotbed, and there's really three key reasons for that. So the first one is enrollment. The University of Oregon on average has 20,000 plus students, and they just announced that for the next 10 years, they're going to continue to increase enrollment by 500 additional freshmen every year. So we're just going to see the population of the incoming classes continue to go up, which is great because in the past, they've been a little flatlined. So it'll be great to see the students continue to increase for student population. The second thing that creates a hotbed is rising rents and the limited supply. So we see most tenants, students will sign a 12-month lease. Well, from an investor standpoint, that's pretty cool because that shows that you're gonna have rent for the full 12 months. But often most of those tenants will go home for the summer. So it gives your property manager a couple of weeks to get the property ready for turnover. And with the tenants or the students moving out every year, it also gives you a chance to increase your rents. We typically see that rents increase about 3.5% annually, if not greater, depending on the property and if it's been renovated. And then the third thing is, it's kind of pivotal for students to be close to campus. Most of them prefer to live on the west side because that's where most of the housing is. So that means that's where most of their friends live. They gravitate there because of bars, restaurants, nightlife. So the west side of campus is currently kind of the hotbed. And we really see that students want to be within a 1 mile range of walking distance to the U of O. And everything that's within that 1 mile range right now, we're seeing a lot of interest of people who are looking to buy, investors that are looking to buy off-market deals, off-market opportunities, as well as national student housing developers that are coming in trying to secure sites where they could build some of those larger institutional student housing projects. So here's three trends to watch for multifamily in the Eugene market. And the first one is cap rates. And cap rates are important because that determines what a buyer is willing to pay for a property. I just recently have sold several properties, fourth quarter of 2024, beginning quarter of 25, in the 5.5% cap range, 5.5% cap range. And we're starting to see that those cap rates are going up. Now, one of the reasons that I was able to sell properties at such a low cap rate, considering that the cost of capital or the cost of borrowing money is more like 6.5%, is because some of the properties that I sold, you could go in and renovate them and then increase to market rents. So while the interest rate might play a factor, investors look more at what their projected future rents could be, and then they're using that for a future cap rate to determine if they're willing to pay a 5.5% cap rate today. But we are starting to see where that trend is starting to cool and cap rates are starting to increase to 6% and a little higher. So what that tells me is our market is cooling just a little bit because what's happening is investors no longer want to take the risk of buying something at a 5.5% interest rate, knowing that they're going to have to go in the summer months and do a big renovation project, and then they'll be able to get higher rents, because if they have to put any type of financing or debt on that, they may have to take that at a 6.5% interest rate. So most buyers right now are saying, hey, I don't want to do all the heavy lifting. I want to buy closer to a 6% cap rate because that's the cost of capital. That's what I have to pay to the lender. So we're just starting to see cap rates increase ever so slightly. So that's number one. That's the first trend to watch. The second trend to watch is limited inventory. I do a lot of transactions off market. I call that my silent market. So often when I know I'm going to bring a property to the market, I'll get permission from the seller to market the property off market for 20 days before I take it to the open market. And the reason I do that is often I have brokers that have called me and told me that they've got a buyer that will be coming to the market, either a 1031 buyer or someone that has cash to place, and they'd rather buy apartments than put it into the stock market or just let it set in a savings account and not earn any rate of return on that. So I'll often reach out to those brokers and say, hey, I've got a 15-unit apartment complex, I've got a 20-unit apartment complex coming to the market, and often we'll put a transaction together off market. Now, I still like to put it on the market even if we have an accepted offer, because basically what that does is that gives the seller an opportunity to get a backup offer in the event the first transaction doesn't perform, or for some reason during due diligence the buyer decides to terminate. So I do like to put it on the open market and get a backup offer for my seller. And then the third trend to watch is extended days on the market. So what we see often is if it's an off-market deal, we will typically put that transaction together in either 30 to 60 days, 30 days if they're paying all cash, 60 days if they're needing financing. But if a property needs renovation, if it's kind of beat up and it needs a lot of work, that property may sit on the market for quite a while. So that's another trend to watch. Right now, days on the market is pretty short for multifamily, especially near the University of Oregon, but that is definitely a trend that you want to watch. And then 3 common challenges that I see for apartment owners. The first one is tenant turnover. Having tenant turnover is really expensive. It's hard on your property. It costs a lot of money if your tenant does damage. Yes, you can go after them, but then you've got court costs and time. So you have to weigh it out, and most property managers will be pretty diligent in going after a tenant for damages, but just general turnover is really expensive. You cannot charge a tenant every time you replace the carpet, paint, unless they've done serious damage. That's just normal wear and tear, and there's some depreciation schedules with carpet and some different things that the state looks at. So you want to make sure that you're minimizing your tenant turnover cost. The second one is operational cost. So right now, insurance seems to be the Wild West of commercial real estate. And especially with the fires that we have seen in the California market in the last couple of years, State Farm and some of the other great national insurance companies unfortunately have had to pull out of those markets. And I think we're going to see more of that. So I anticipate that operational costs will continue to go up, as well as the cost for payroll and the cost of supplies. So keep a tight eye on your operational costs, because that then trickles down to the bottom line for your net operating income. And the third thing is property upgrades. That seems to be a real pain point for a lot of property owners regarding when you need to make property upgrades. Often you'll get to a point where your rents hit a plateau and you're just not able to raise your rents any higher unless you go in and do a major renovation. But often those renovations could cost you $20,000, $30,000 per unit. So you have to really weigh it out and ask yourself, is it really worth $200,000 or $300,000 for me to put renovations into this project? Or would I be better served to simply sell the property now, complete a 1031 exchange, and let some other person do the renovations and kind of go through that hassle of the process? If you're ready to sell, or if you're just looking to see what's happening in the market, feel free to drop me a message down below. Tell me what you're looking for, and I'd be happy to give you some information related to cap rates in the Eugene Springfield local market. If you liked what you heard, please click on the like button, hit the subscribe button so you can be notified of our next video, and happy investing.